In its statement, the Monetary Policy Committee said because of the lockdown extension, both supply and demand effects will reduce growth and deepen it in the short term as businesses remain shut for longer and households spend less. This was before the lockdown was extended further under Level 4. The Reserve Bank has also raised concerns about the impact of rising job losses and consumer demand. The central bank will likely revise downwards its growth forecast for this year from the 6.1% contraction it predicted in April.
The MPC communicated at the April emergency meeting they expected growth to contract by 6.1% this year and for inflation to average about 3.6% this year. And this was premised on a 5-week lockdown period. At the time, we were also expecting growth to contract by about 6.4%. Since then, we've revised our growth outlook, given that we expect a much longer gradual reopening of the economy. Our house view is that the country will only reach level 1 of the lockdown in the fourth quarter of this year. And as a result, we expect growth to contract 8.2% this year and inflation to average 3.1%.
The bank has forecast inflation to average 3.6% this year. It says the overall risk to the inflation outlook appear to be on the downside, and the effects of the currency depreciation will likely be muted. The lower international oil prices will likely continue to put a cap on petrol prices in the near term. In its last MPC, the bank indicated that the implied path of policy rates over the forecast period generated by the quarterly projection model indicates 5 repo rate cuts of 25 basis points extending into the first quarter of next year. The bank so far this year has reduced the repo rate by 225 basis points. Lora Sefakomosi, SABC News, Johannesburg.